Welcome back. We're now hearing from Coinbase's CEO that the US government will own over $600 billion in Bitcoin reserves. We're going to be going over that. I'm going to show you the video in just a few minutes, but we're going to be starting right here with ARK Invest raising their 2030 Bitcoin bull case price targets to $2.4 million. Now, keep in mind, 2030 is only less than 5 years away. And we have one more cycle to go till then, right? We have the end of this cycle now in 2024, 2025 after the Bitcoin halving. And then we're going to have one in 2028 and 2029 potentially in the next Bitcoin halving cycle. So let's understand a little bit more. And today we're also going to be kind of going through what else is happening in crypto. We're hearing the Federal Reserve dropping some of their rules and guidance against banks owning crypto, meaning now the banks can hold crypto. So we'll go through that. We're also going to be talking about this new MicroStrategy company called 21, and really what I think is highly over speculative moves in the price of this pre-merger stock. And I'm going to show you guys why this may be a good potential short opportunity or wait and hold opportunity to make more money on the downside or post-merge split. Let's kind of get into all of these topics. Don't forget to give this video a free thumbs up. Also hit the subscribe button. That way you never miss a new video. But remember, thumbs up are free. Crypto is not, especially if Bitcoin does hit $2.4 million. So keep in mind, this is a new updated long-term projection on their expectations for Bitcoin. They're now projecting a bull case price target of $2.4 million by 2030. The report from ARK Invest lays out a comprehensive model framework based on Bitcoin's total addressable market potential, adoption trends, and assumptions around supply dynamics. The new updated target represents a compound annual growth rate, which is also called CAGR, of around 72% between December of last year and December of 2030. In comparison, ARK's base and bear case estimates stand at $1.2 million and $500,000. And so this is interesting. This is their base and bear case, right? They have a base case, bear case, and bull case. And so even in a base case, which is kind of like a normal trend kind of what most people would agree could potentially occur, and based on the math, I would assume as well, would be a 53% annual growth rate, which kind of makes sense if you think about the 4-year cycle. Bitcoin typically from the bottom of the market to the top of the market 10x's at least. But if we just use that 10x as a kind of a benchmark, and you divide it by 4 years, right? That's about 25% growth every single year, approximately. And so 250% growth every single year, every year for 4 years. So 250%, that's a pretty big number. But even if you look at a conservative estimate and say, okay, I'm buying Bitcoin at $50,000 and it goes up to $100,000, so it doubled, right? So if we double, that's a 100% gain over the course of 4 years. It's about 25% every single year, which is fairly in line with what their CAGR is for a base case of about 50% a year. 50% a year over the course of 4 years is approximately 200% gains. And this is kind of a conservative estimate for Bitcoin. I mean, we know Bitcoin doubling is fairly easy, and doubling after that is fairly easy too during a bull scenario. But even when they're looking at the bear case, right, which is the lower end, right, the likelihood we're going to be in a multiple year bear case in Bitcoin is highly unlikely. It's probably going to continue to go through this roller coaster of bear, bull, bear, bull. And so even in a bear case, they're showing 32% compound annual growth rate, which is also pretty interesting as well. And that would still put the Bitcoin price at $500,000 in 2030, which is basically 5x from here. So if you kind of look at the actual numbers, it's really like 100% every single year, all the way through the fifth year, which is 2030. And so a lot of people are looking at this and saying, like, this is not possible. But what we're going to be doing in today's video is laying out how this is very possible that we could hit a multiple $1 million Bitcoin price. Now, keep in mind the underlying, thesis for Bitcoin is that the fiat currency is going to continue to inflate, and that is not going to stop. And so, not only do the Bitcoin maximalists and crypto maximalists believe this, but now we're starting to see the banking world, we're starting to see the investment world kind of moving over and getting more publicly, at least, involved in crypto. And this is on CNBC just the other day. $4 billion Ritz-Holt CEO said that Bitcoin is decoupled from the NASDAQ. Let's listen in to this video.
The most interesting thing that's happened over the last week or two is that it's decoupled from the NASDAQ, although not today, and it started to trade with gold. And I think, so if you said, yes, we should have a 1% Bitcoin sleeve because it's not stocks, but it has the potential for returns, that's actually what you really want to see. You want to see it go up while your other holdings go down, and then you could say, look, I have a non-correlated asset. So that's something new, and we'll keep following it, and we'll keep watching that.
And they are, as BlackRock has done, as JP Morgan has done, as all the banks have done, including Fidelity, which is a major brokerage house that has about $4 trillion of assets under management. Last I checked, I think it's a little bit more now. And basically, they are really the custodians of many people's retirement accounts and 401ks. And a lot of people have their money in 401ks or retirement accounts, and they don't even know what they're invested in. Anyway, Fidelity Digital Assets, which is the digital asset arm of Fidelity, said we've seen Bitcoin supply on exchanges dropping to due to public company purchases, something that they anticipated accelerating in the near future. Think about that. They believe that more companies are going to be buying Bitcoin, which they are. We know Marathon Digital has just taken out debt to buy Bitcoin. We know GameStop is talking about buying Bitcoin. MicroStrategy, obviously, continuing to buy Bitcoin. And also this new company, 21, which is going to be merging with this Cantor Equity Partners stock, which we're going to be getting to in a little bit because there's a lot of activity over there. But maybe there's other companies that we just don't know about. And keep in mind, if the companies are going to do this, they're going to be approaching Coinbases of the world, Fidelities of the world, to understand what institutional custody of these cryptos looks like so that they can actually, invest. Fidelity Digital Assets continued saying 2.6 million Bitcoin are on exchanges, which is the lowest level since November of 2018. That's very interesting because November of 2018 was 1 year after the market high in 2017. And if you guys follow my channel, we talk about the 1 year cycle from the top of the market to the bottom of the market historically has been exactly 1 year to the day. And so it's interesting that Bitcoin on exchanges now, with more people using it, with more liquidity, I would say available than maybe a few years ago, there's no Bitcoin on exchanges. Well, why? All that liquidity that has entered the market from longer term holders over the last few years, this has been basically vacuumed up by the Bitcoin ETFs and MicroStrategy. And it's going to continue to get siphoned up. And so those Bitcoin effectively leave the exchanges for custody wallets, and they don't return to the open market. At least they haven't just yet. Anyway, over 425,000 Bitcoin were moved off the exchanges since November. Public companies have added more than 350,000 Bitcoin post the U.S. election, and public companies have bought over 30,000 Bitcoin per month so far in 2025. And so if we do the math on that, right, 30,000 Bitcoin, and we're basically, let's just use an average for this year, about $90,000. That brings us to $2.7 billion per month, and we're basically in April, so the fourth month of the year. So far, just about $11 billion worth of Bitcoin has been purchased just in 2025. And we're not even halfway through the year, and we haven't even seen the Federal Reserve lower rates or the people feel a little bit better about the economy. But that is not stopping these Bitcoin ETFs from purchasing, from Wall Street purchasing more and more Bitcoin. What we're seeing at the end of April, which we haven't seen effectively since the post-election Trump pump, is that the ETFs are starting to inflow again. This is the ETF chart for the last couple of weeks, and you can see that we've basically been having outflows from these ETFs, multiple billions of dollars since February. So that's multiple months of outflows. And now we're starting to see basically multiple billions of dollars of inflows in just 1 week. So this could be an indicator that Wall Street is starting to re-enter the market. But remember what I've told you guys. The MicroStrategy purchases after the Trump pump, after the election, this has the liquidity for MicroStrategy. So MicroStrategy is buying, but they're buying it from somebody who is selling. Where are they finding all of this $2 billion worth of Bitcoin in just a matter of days? Well, we know that it's coming from the ETFs because the ETFs have slowly drained out. And what has happened with the price of Bitcoin? It's basically been stable and gone lower since the beginning of the year, since MicroStrategy continued to purchase. But now we're starting to see the reverse. So who is the liquidity for these ETF issuers? If MicroStrategy comes in the market while the Bitcoin ETFs are continuing to purchase, where is all that liquidity coming from? In my view, there there isn't enough liquidity, and there is going to be a supply shock unless we have the likes of like Mt. Gox releases their coins, or another big whale releases their coins, or something like that. All this Bitcoin, it's just a supply shock. And when we have a supply shock, what happens to the price? Boom, much higher. And we're thinking about 2030, right? So if we, between now and 2030, if these companies keep buying Bitcoin, MicroStrategy keeps buying Bitcoin, GameStop buying Bitcoin, other companies buying Bitcoin, well, what does that lead us to, right? What about Google? Is Google going to be buying Bitcoin? Well, we're going to be talking about Google in just a few minutes here. But before we do that, let's hear from Coinbase's CEO saying that the US government will own over $600 billion in Bitcoin reserves. Let's listen in to Brian Armstrong, CEO of Coinbase.
That, but I think it's clear at this point that, Bitcoin is a better form of money than gold. It is provably scarce, just like gold, but it's more portable and divisible. So you can actually use it, has higher utility, I would say. And it was the best performing asset of the last 10 years. And so for store of value, I think it's going to be important for governments to hold this over time. It might start with being 1% of their reserves, but I think over time it'll come to be equal to or greater than gold reserves.
Okay, great. Well, let's go to the next question. Let's go.
And where are gold reserves? $600 billion. And this brings us to the Federal Reserve announcing a withdrawal of guidance for banks related to their crypto assets and dollar token activities, and related changes to their expectation for these activities. Now, let's kind of break down exactly what this means. And by the way, Caitlin Long, who has long been trying and fighting with the Federal Reserve to start her bank, Custodia Bank or Avanti Bank, it's basically going to be a crypto-friendly bank, and they have not been able to get a banking charter. They have not been able to get access to the Federal Reserve's master account, and they've been suing the Federal Reserve as well. Well, she says that the Federal Reserve did rescind some of these rules, but they did not rescind their January 27th, 2023 anti-crypto guidance, which the board voted 7-0 to approve at that time. But it appears they rescinded all the other guidance that they issued without a board vote. This means that the Federal Reserve didn't yet comply with the Trump executive order. I'm guessing she's specifically saying about the executive order about, becoming more friendly to crypto. Dark Horse on X posted this. He said, Caitlin Long, who fought the Federal Reserve for years to be compliant, points out that what the Federal Reserve actually removed was absolutely meaningless due to that other guidance that is still in place. So this is just a PR stunt from the Federal Reserve. And this is not actually the Federal Reserve giving, the banks the okay to get involved in crypto. But that's how they made it seem. So what was dropped was these two rules, which were called engagement in crypto asset-related activities by Federal Reserve supervised banking organization. This guidance required prior notification to the Federal Reserve before engaging in crypto activities and emphasized risk management expectations. They also dropped the creation or use of dollar tokens by the Federal Reserve supervised banking organizations. This warned against issuing dollar peg tokens like stablecoins unless the meeting strict supervisory unless meeting strict supervisory standards. They left in this other policy statement from 2023 that legally grounded in the Federal Reserve Act declares a presumption that crypto activities are unsafe and requires supervisory non-objection before any state member bank can touch crypto. This is the Federal Reserve's core legal position, not just a recommendation. It's binding unless overturned by legislation, another formal policy vote, or court action. So in short, what the Federal Reserve did was meaningless. Very interesting here. Because, at the end of the day, I do think because of Caitlin's position in this and her bank position in this and kind of the whole crypto world knowing that, she's been trying for years to open this bank and they just haven't been able to do it, right? The big banks have kind of taken over. They're saying crypto is not safe, but meanwhile, the largest bank in the world, JP Morgan Chase, banks the two largest crypto exchanges potentially in the world as well, Gemini and Coinbase. But their CEO, Jamie Dimon, says that crypto is manipulative and fraud and gross and has no value. It's just back and forth talk, right? And so this leads us to understand, like, is the Federal Reserve going to allow these banks to get more involved in crypto? Well, based on the the executive orders and the crypto czar, I think the answer is absolutely yes. But we will see kind of what happens with that. I mean, at the end of the day, this is still bullish for crypto, right? Because now we have the Federal Reserve looking at Bitcoin, looking at all cryptos, and effectively being forced to allow these crypto assets to be integrated into the system. And this has always been the thesis, right? A lot of people are like, no, it's never going to happen. No, like our job as investors is not to figure out like the definitive of what will or will not happen. It's to look at the most likely outcome. When we see that more and more people, more and more investors, more and more companies, more and more predictions and research is going into this asset class, and more money's being put behind it to grow it, and more billionaires are using it, more billionaires are transacting with it, more companies are using it, more companies are putting it on their balance sheet, more companies are creating their own stable coins, more companies and celebrities are creating their own coins. When we see all of this, what do you think is the most likely outcome, right? I mean, it's literally like, okay, you see a trend on TikTok, like for instance, water talk. You guys have seen that? If not, it's quite the trend. It was really like last year, but essentially like that is a trend, right? People putting, pumps of little different flavors in their water and making it like that's a trend. Okay. This is changing the monetary system. This is not a trend. Whether this takes 100 years, 50 years, 10 years, 5 years, the point is it's going to happen because we know there needs to be digital money. And the Federal Reserve saying, oh, well, we don't need CBDCs. They don't. They have USDC. And USDC and Tether, once these are fully regulated and there's legislation, these are going to be the digital dollars. They're going to be at the behest of the Federal Reserve. The Federal Reserve is still going to be in control of the money, just with one extra layer added in. They're the new banks, the new issuers of this new money. It's kind of like, well, the Treasury technically prints the money, but who is actually issuing the money? The money is being issued by the Federal Reserve, right? And so these stablecoin issuers are becoming the new Federal Reserve or the new Treasury, the new money printers, right? Because they create the money that the Federal Reserve issues. So that's kind of where we're going. And the fact that people still don't see this and they're like, well, I don't really know about Bitcoin. I think that, investing in Tesla or investing in Google is going to be the play. Well, that brings us to the Google point, right? Because Google is currently worth $2 trillion. This is the market cap of Google. And this doesn't even include all the derivative markets built on top of it. So the actual value of this ecosystem is multiple trillions of dollars, right? And if we look at Bitcoin today, Bitcoin is under $2 trillion. I want you to think of this, right? Google provides a service, which right now they do have a lot of access to data and information, and they also they own YouTube, which is a whole. I mean, this is the platform that we're on, right? We all love YouTube, and by the way, don't forget to give this video a thumbs up for being here on YouTube and giving us the opportunity to learn in a kind of decentralized way. But we have the legacy, right? The banks are the legacy financial system. Google is like legacy technology. I still talk to people who believe that like if you get a degree in IT that you're going to be making a ton of money. I'm like, no, because everybody over the last 10 years has gone to school for IT and gotten into IT jobs. That now IT jobs, they're just kind of like there's an abundance of the talent there. And I think that we're kind of seeing the same thing with some of these legacy companies like Google. Well, Google just announced a $70 billion stock buyback program for this year. Now, this is not uncommon. We've seen this with Apple, we've seen this with Google, we've seen this with many of the large companies that give stock buybacks. This is a way to take some of their extra cash on hand and quote unquote give it back to the shareholders, right? And instead of doing it in like a dividend way, they just buy shares back. And by buying shares back, they're limiting the supply, which also pushes the price up or keeps it elevated. But guys, $70 billion they're just buying of their own stock. They're a $2 trillion company, right? So that's basically what are we at? 7%. So it's 3.5% of their market cap. They're buying back of their stock. Like, is this an efficient use of capital? Like, because all that does is keep the stock elevated and or maybe push the price up a little bit. But it doesn't really do anything to the value of the corporation. It doesn't do anything to the growth or long-term prospects of these companies. And again, a lot of these legacy companies don't think about this. We learned this during the pandemic when they shut down the global economy, and every company within like a week was like, we're gonna be bankrupt if we don't get an injection of money immediately. And it's like, wait, all these companies have made tens of billions of dollars in profit every single year for the last 10 years, and they have nothing to show for it. They don't. Well, in the crypto world, in the Bitcoin world, people are thinking ahead, right? We're already thinking about 2 cycles ahead. We're thinking about 2030, right? Google's thinking about this year. They're not thinking about 2030. Same thing for Apple. Like people who love Apple, and by the way, I've never actually met somebody who's like a diehard Apple fan anymore. I mean, maybe a few years ago, but not anymore. But either way, these diehard Apple fans, they're like, oh no, Apple is, it's the best company in the world. It's like, what have they created? And what are they creating for the future? Nothing. They've created nothing. A yellow iPhone. They just came out with another iPhone that I think it has like one extra feature or something like that. There's nothing new here. Again, this is a $3.1 trillion corporation. And again, no actual hard assets to show for what is going to happen over the course of time. So these companies are not thinking about the future. They're thinking about today. And how do we know that? Well, all they have is the yellow iPhone. That's the only thing they've released. Or they just released recently that you can make the icons on your screen have rounded edges. That's the new feature. That's the new release, right? $3 trillion corporation. That's what they're releasing. Right, a major release for the year is you can make your icons rounded edges. Yeah, that's not value, guys. Apple is worth over 50% more from a market cap perspective than Bitcoin. And all these companies do is burn through cash, just literally burn through it. And so anyway, this guy, Joe Burnett on X, he's director of market research at Unchained, he said Google will be much better off acquiring 744,000 Bitcoin. Like, to put that in perspective, guys, let's put that in perspective, okay? They're talking about $70 billion over the course of this year buybacks. And by the way, I've covered Apple and Google doing this over the past many years. I mean, Apple, I think they buy back $90 billion. Last year, 80 billion, the year before that. And this is all unproductive money because it's just going to the stock. It's not really even going to the stockholders unless the stock was going to go down in price, and that's why they're buying it back. But anyway, $70 billion, and we're going to divide it by $95,000, the price that we are at today. Over 700,000 Bitcoin. They could literally have more Bitcoin in one shot than MicroStrategy. They could have more Bitcoin than probably the top 2 or top 3 Bitcoin ETFs. But instead, they're not thinking about their future. They're not thinking about, where they're going to be in 2030. And so if a company is not thinking where they're going to be in 5 years from now, and you have companies looking at investing in a technology and building on that technology, right? Because if you guys think ARK Invest is just investing, wrong. They are investing in the ecosystems, right? In companies to build all of these and it may be ARK Invest, it may be Kathy Wood, it may be the investors in ARK Invest, but basically the money that's going into these Bitcoin related funds, it's also going into Bitcoin development and crypto development to integrate this technology in everything that we do. And so while Bitcoin and crypto are doing that, Google and Apple are buying back their shares of stock and releasing yellow iPhones and curved edge icons on your screen, which basically every other operating system, you could have done that 15 years ago. And so that's what they're doing. And so how can I look at an investment and say, well, let me invest in Apple at $3.1 trillion when all they're doing is buying back company stock? They're not adding value. Think about that. They have so much cash, and they're doing nothing with it, nothing productive. They're just putting it into the market to buy back their own stock to increase the volume and keep the price elevated. I mean, this is ridiculous. Instead of buying Bitcoin, and over the course of time, I mean, think about it. Bitcoin company, they putting $70 billion. Even if they put half of that, they would have 350,000 Bitcoin, more than that actually. But they would still have a larger portion of Bitcoin than many other holders. They'd be a top holder in the world. To me, it seems like they're the bankers and these executives of these large corporations are the same people, right? Like they're doing the same thing. Like think about the banks. They don't even have your money. You put your money in, it's already out. They've already loaned it away. So the banks have no money. Apple has no money. Google has no money. And I'm saying relative, right? They do have money. Obviously, they're doing these stock buybacks, but they're taking the money and they're just throwing it at the market, right? I mean, and is this really anything productive for their stock? I mean, you're putting billions and billions in. I think it's Apple that did $90 billion over the past few years. And if we take it post pandemic, we were basically in the $150 range. And so from the bear market to now, billions and billions of dollars in stock buybacks, we're $50 higher, 33% higher. That's not productive money. And so in my view, if I'm looking at this and saying these companies are way overvalued, they're not putting any of this money into a redevelop. Think about what they could create with $70 billion. They hire the top talent in the world. They say, go for it. They're not doing it. They are not doing it. And so if I'm analyzing these companies this way, I can guarantee you that the other crypto investors are also doing that. And they're also learning this. And they're also talking to their business partners and telling them about this. And they're slowly but surely, they're going to have to keep increasing their stock buybacks. Because in my view, all the investors who are invested in Apple and are learning about crypto and learning about Bitcoin and learning about these stock buybacks and the waste of capital. Because, think about it. Apple, Google, whoever does stock buybacks, they're doing it because they need to keep the price elevated in their stock. But you should be elevating the stock price based on the value of the company, based on the technology or the product or service that you create. But they're not putting that money to that. They're putting their money in just keep the price elevated. We'll just release a yellow iPhone once in a while. Everybody will be happy. It's the same thing with Facebook. Tens of billions of dollars they spent over the last few years on the metaverse, and we have no metaverse. At least they were spending it on development of that technology and not just stock buybacks. But we still don't have anything, right? And so this is going to accelerate the crypto world and the crypto space, and we're seeing this happening. We're seeing it happening currently. Now, I told you guys the other day about this new company called 21, which is going to be Jack Mallers, Tether, SoftBank. They're getting together, and they're going to be starting this company merging with Cantor Equity Partners. which is a public company. It's a SPAC, right? It's basically a company that was put on the stock market to then merge with another company at some point in the future, and that's what they're going to be doing. Well, everybody is aping into this stock, and I can't wait because I'm thinking it's shorting time, right? And let me explain why. So in this new company, they're saying they're going to have 42,000 Bitcoin, and 42,000 Bitcoin at a price of they called it about $85,000 when they did their numbers. We'll just call it $90,000. It's $3.7 billion, right? They're going to be I think they're pricing the company at about $4 billion or $4.6 billion. But the thing is, people are just thinking that this company, Cantor Equity Partners, is going to be worth $4 billion in market cap. And currently it's $427 million market cap. And by the way, this is doubled overnight. That is not the case. If you actually look at the documents, and there's other tweets about this as well, but if you look at the documents and you look at the tweets, the new company is only going to be giving 2.7% of all the shares of all the new value to Cantor Equity Partners. So if we just do the math on this, right, $4.6 billion, which is the valuation they're going to be starting at, and the market cap, $4.6 billion, and we times that by 2.7%, that means that you're only going to be getting $124 million worth of shares. Then we have to understand how many shares Cantor Equity Partners has. They have 10 million shares. You can see that right here on MarketWatch. So if we divide this number by 10 million shares, this will tell you today what your new share is going to be worth, approximately $12. $12. And so the stock right now is $32, which is almost 3 times the amount. And by the way, this basically went up from the NAV, which is around $12. But everybody started aping in and buying this stock because they're like, well, it's going to go up to $4 billion. So we have a guaranteed 10x from here. And that is not the case. That is not the case. And I'm seeing it, I mean, it's all over social media. Everybody thinks that this is going to 10x from here to get to the $4 billion valuation. If we go over $1 billion or over $2 billion in this stock, I think it's possibly an opportunity to short. Again, I'm not saying to do this. I don't even know if I'm going to do it, but I'm just looking at it as like, this is probably the point that I'm going to analyze whether I'm going to short this stock or not. Because they don't even have approval yet from the SEC to merge. I imagine they will get the approval to merge, but they don't have that approval yet. And so when I am analyzing, what's going on here, there's a lot of speculative moves and a lot of speculative investment, and people who bought at $15 or $20, now they've basically doubled their investment overnight, and they're like, well, we're going to go higher because we're just going to still 10x. And even if we don't, even if you don't believe that, or even if you just look at the math and say 2.7% is not $4 billion, so this could technically go to $300 just based on the speculation. Well, this may be an opportunity to buy and just ride it up. But I think there's enough smart investors out there that understand how this merger is going to be happening by basically looking at the documents, that they understand this is already overvalued almost by a factor of 2x or 3x what it actually should be worth, which is $12. And that's if the valuation stays the same. Because if this happens in 2 months, we don't know where the market's going to be in 2 months, where the valuation is going to be. So I think that this is highly overvalued already. I think it's going to go higher, and there's going to probably be a lot of volatility. But if this goes over $1 billion, which is basically double where we are from here, people are going to be shorting the F out of this stock and potentially going to short it below $12. That's what I think is going to occur. So I'm going to continue to monitor this. It's been extraordinary seeing like just the activity. I mean, you could see right here, it started the week at $10, went up to $16, and then overnight it went up to literally $40, and then it started to come down. But you see, it didn't even go above $40. It went to $39.29, because I'm sure there's a ton of sell orders on the books, because not all the holders of this are insiders, right? And so the holders of this are probably going to sell because they understand that this company is not going to be worth $4 billion. The merged company is going to be worth $4 billion, but that's with new shares, right? So just because you're going to be getting 1-to-1 doesn't mean your share is going to be worth $32 in the new stock. And this is where a lot of, I would say like newer investors get caught up because they get caught up in the hype and they don't understand. This is the same thing as tokenomics, by the way. When we talk about tokenomics in crypto, and we talk about the 21 million Bitcoin, we talk about the inflationary rates of these coins like XRP because the circulating supply is different than the maximum supply, and the maximum supply still at 37% is owned by Ripple, who continues to sell on the market. Like those are tokenomics. It's the same thing in crypto, learning about in stocks, learning about the tokenomics, understanding how Google buybacks work, Apple buybacks work. How does it work? How does it impact the price? How does it impact the shares? How does it impact the holder? And is this productive money, right? There's a lot of speculation. And this tells me we are in the bull run. People don't feel it yet, but we are in the bull run. My indicators for the bull run were when we see a reversal in Ethereum. I think that we've seen the reversal already. I mean, look at the 7-day chart. It's up 14%. This is going unnoticed by a lot of people because of the narrative in the bear. The other one that I looked at is Polygon. Polygon is 24 cents. It was below 20 cents for a while. And in my analysis, I said when it goes above 20 cents, I think we're back in the bull. And we're seeing this across the board. I mean, even the Trump coin is up 84% on the week. So we're in the bull run. We're seeing a lot of moves very rapidly in assets. And we're going to see this across the board. I don't think this is just SEP. I don't think this is just individual coins. I think it's going to be across the board. We saw it with Ergo last week. We're seeing it with the Trump coin this week. Seeing it with Cantor Equity Partners this week. So we have to keep our eyes on all of these and understand that these major moves to the upside are also going to end up major moves to the downside at some point. Maybe it's going to go on to the upside, continue. But we have to kind of analyze. And this is really about thinking about the long term. Somebody left a comment on the channel the other day saying, Cryptoviser, your videos are delayed by a few days. And they are. It even says it in the description of my videos. But we talk about macro investing on this channel, right? We talk about zooming out and understanding what's going on, where these markets are flowing, where the money is flowing. I don't trade on an hourly basis or even on a daily basis. I mean, sometimes I literally don't look at the markets besides this channel for weeks. I won't look at my portfolio for days, right? Because if I have a thesis on an individual asset that I'm investing in, very, very unlikely that thesis would change overnight. The changes in your thesis change throughout time, right? As you start to see newer technologies emerge or newer releases or launches or the narrative shifting to another category of crypto, from AI to gaming to smart contracts or whatever the situation is. The market's trend, and that's where we have to look for those trends. Right now, it seems like everything's just pumping and dumping all around. And there's people who are very bearish on their coins like Ethereum or Polygon or even Cardano and saying it's not performing. But they are performing. They're just not performing 10x every single day like you want. Will they? I mean, hopefully. Hopefully it does. Anyway, let me know what you guys think about today's video. Don't forget to give the video a thumbs up. Also, let me know if you think that ARK Invest's $2.4 million price target for 2030 is possible. I mean, I do think that it's possible. It's one more cycle, and we know there's going to be a supply shock situation because most of the Bitcoin that's being purchased from institutions is never going to be sold. With that, I'll see you guys on the next video. Invest responsibly, do your own research, and crypto on.